Good morning, everybody. Hey, welcome to Friday. It is February 10th. I hope you've had a great week and looking forward to the weekend. We've had a couple days that looked good and then ended up not so good. We'll talk about that and more when Dave joins us here in just a few seconds.
Mendez, Camila Cabello there at 105.7 Light FM. Good morning, senoritas y senores. It's 19 here before 9. Time to check in on your money and see what's going on Wall Street. It's one of those days where there's not a lot of government reports coming out to affect the market, so it's what's going on with the actual companies that get traded that make a difference. See if that helps a little, because we had a couple of really crummy days on the market. Let's get on the phone with Phillip Statler from Statler Financial Services and see which way we're going to head this morning. Phillip, good morning. How are you?
Hey, good morning, Dave. I'm doing well today. It's the market, though, has not been faring real well this week as we come into Friday. And it doesn't look like we're going to get much of a turnaround either, at least from the futures today.
Yeah, it looks like it's so far not a very pleasant start to the day. We had one day of euphoria after Jay Paulson used the word disinflationary at a rubber chicken speech. Everybody got happy, and then everybody sobered up and started selling again. So we kind of got a trend going after the last off of this week, don't we?
Yeah, we do. I mean, it looked good most of the day, and then all of a sudden I turned around and looked after 4 o'clock and it was down. It's like, oh my goodness.
And just to be a spoiler alert, it's probably going to look even worse this morning because, just after midnight last night, Russia announced that they were cutting back crude oil production, and because nobody will give them the money that they want, so consequently they said, heck with it all, we're going to cut back our production, trying to raise the price we get. With the countries that will still buy from them. And inside of about 10 minutes of that announcement, the Dow ended up falling about 150 points in the futures and got about the same percentage number on all the other major indexes. We probably aren't going to be affected much by that because we aren't doing business with Russia anyway to any great extent, but it didn't help the futures one tiny little bit, did it?
It did not. It did not. And so we continue to see a lot of red this morning, which we'll go through here in a little bit.
Oh, yeah. Other things going on among the issues being traded. There are rumors out that Bob Iger is starting to shed product at Disney. The rumor came out that he's open to the notion of selling Hulu, which just started out as being a replay specialty streaming service for the networks, but now it's become just one of those cable substitute streaming services as well. So I know a few people that have Hulu, and they're probably looking at that this morning and saying, okay, fine, what are they going to do to us now? But it's kind of an interesting change of strategy, isn't it?
It is, it's one of those things that, and Iger said, you know what, everything's on the table when talking about Hulu ownership, what he ends up doing with it. They don't own the whole thing, though last year they talked about just buying Comcast out because Comcast owns the rest of it. Disney owns like 66% of it. So, we'll see what happens there as what they want to do with that, whether Comcast comes in and buys the whole thing, or if they find another partner to unload it onto.
Maybe they can just sell ABC. You might get some decent programming on ABC if they did that. Can you tell the network is not targeting me of late? Other stuff going on this morning that could affect markets. I can tell you this, that on my big winner list after the Russian oil production announcement, every single one of my big leaders is in the oil and petroleum industry. But other stocks that are moving, Bank of America, I got kind of a charge out of this. Bank of America announced that they were downgrading Deutsche Bank stock, which kind of strikes me as about the same thing as slinging dog dew across into your ugly neighbor's backyard, doesn't it?
It is. And let's face it, when they came out with their report earlier this week, it was not a good report. And so you would expect not only Bank of America downgrading, but probably everybody else. But you would, bank to bank, it always gets a little funny when they start downgrading their neighbors.
Kind of hits that. The other thing that Bank of America did, I saw the top line, and you actually found the full article. They announced that they had an unexpected increase in consumer spending in January. It was close to 5%, but when you dug down on the article a little bit, they said, that was after the COVID scare that we had in January of last year. So the little up that we got in the process kind of went away in a hurry, didn't it?
Well, it did. So in December, they said spending increased by 2.2%. And if you look at January year over year, it was up 5.5%. But again, looking at January of last year, remember Omicron was really starting to hit hard, and so that kept people from spending as much money. And they attributed a lot of it to Social Security going up for retirees and minimum wage going up for other workers. So, they had some attributes there that contributed to that increase.
I kind of would expect that. You give us an 8% rise in our Social Security benefits, even if it's all going to sundries, it's all getting spent. So, yeah, that was kind of like a built-in stimulus payment at the beginning of this year, wasn't it?
Yeah, it was for sure, or at least for retirees.
Yeah, well, and us old folks that are taking it, even though we're still slaving over a hot console every morning. So, hey, you had a tidbit as well out of one of the stocks that we hear a lot about because they're big. I had a lot of fun on the Showbiz reports this last year, talking about all the problems that Kanye West is having by basically opening his trap and saying stupid stuff. But one of his former partners is really hurting. Adidas is stuck with a whole load of stuff that they may have to donate to Goodwill, huh?
Yeah, I'm not sure what they're going to end up doing yet. They're trying to repurpose it. But, in the November, December last year, they came out after they broke up with Kanye and said, hey, look, we are sitting on $500 million, $500 million worth of inventory of his shoes, and that we're not going to sell. And so, okay, they took a hit then. Well, they come out in January or this week and revise that number up to double that, to $1.1 billion worth of Kanye West, what they call them, EZ shoes, in stock. And they're not sure how they're going to repurpose them or what they're going to be able to do to them.
They need to find another celebrity they can nickname Yee and unload the junk at discount prices. Yeah, when a celebrity screws up the way Kanye did, it can have repercussions in areas that you don't really think about. Yeah, he's persona non grata on social media, but I got a sneaking hunch he's probably not welcome at Adidas corporate headquarters right now within a block or two, right?
Probably not. And you may, I know he wasn't really, politically correct what he said and was probably not nice, but when on the business side of it, Adidas may have needed to rethink that a little bit.
Yeah, I would think that the best thing to do is after that happened, before they terminate the relationship, say, "Hey, big sale," and then dump him like a hot potato. If folks can't tell from the pattern of our normal patter, there's not a lot going on first thing this morning. We may move the market a little bit with the University of Michigan sentiment report. The consumer sentiment index comes out about 10 this morning. Don't have a whole heck of a lot otherwise. My fear and greed index on the market is leaning toward greed, and I think some of it is the leveling off we've taken since Tuesday. Any of the companies going to be changing our mood any this morning with the reports that are out in first quarter?
Well, not necessarily to the good.
No.
We got Lyft reported. Yeah, Lyft reported, and it was a dismal report. They were expected to earn 10 cents a share, and instead they lost 75 cents a share. Yeah, that was a pretty big reversal for them. And their revenue missed substantially too. They were expected to make about almost $1.1 billion in revenue. They only made $975 million. And then, of course, they've gotten downgraded by several different analysts. So they are taking it big time today, down 31% this morning.
Holy crud. I saw a top line thing on one of my tip sheets saying that after report, investors are dropping Lyft and running to Uber, which may be the tail of the tape this morning on those two businesses.
Yeah, it may be. It may be. That's, they may be dropping Lyft and Uber into Uber, right? So then we've got another travel company, Expedia. We talked about a couple yesterday. But they also had a disappointing quarter. They earned $1.26 a share versus $1.67 they were expected to make, and revenue was it was pretty close, but still off on the wrong direction. So they're trading down about 2.6% this morning. We had Yelp report. Yelp actually had a positive things to say. They posted higher revenue than expected, and then their earnings were basically in line with what everybody thought they should be. And so they're up 7.5% just because revenue was up. So a good bump for them. And then one that, we don't always understand the company name, but we know what it sells, and that's Newell Brands. They're the company that has Yankee Candle and Rubbermaid and some of those companies. And so they came out and reported, and they're down. They missed on earnings this last quarter. They're blaming it on tougher operating environment. Obviously slower demand because of inflation, I think, in some of those things that, hey, I don't necessarily need a new candle, is hurting Newell Brands. They're down about 7% this morning. They're actually
I was going to say, that surprises me. You find me a woman who will ever say, I don't really need a new candle.
Well, if it's a candle or a loaf of bread, what you gonna pick?
Yeah, I guess I'm not shocked with the Rubbermaid division being a big bulk number in the bunch. Remember, we talked about Tupperware a few weeks ago, and those storage solutions, for some reason, are falling on harder times than we expected.
Yeah, they are, and I think it may be just a fact of disposable income drying up. The last one I have for you is a company called Dexcom, and I had to look to see, but Dexcom is one of those glucose monitoring systems. So it monitors diabetics blood sugar continuously, and they can check it on their phone or their app on their phone, and so that's kind of neat for them. They did well. They came in at 34 cents a share versus 27 expected. And so they've got a new a Super Bowl ad coming out. You may want to look at that with Nick Jonas. And so they're trading up about 3.5% this morning.
I kind of wonder about the Super Bowl marketing strategy, but the company I know something about is the caregiver for a diabetic for years. It really excited me when they came out with that product a few years ago. Yeah. Resetting the table, it was a down day on Wall Street yesterday. The Dow was down by 249, S&P was down by 36.5, and the big loser, kind of as usual, NASDAQ down a full percent. Down 121 points yesterday. I was kind of hoping for a turnaround until I saw the curve at midnight last night. 45 minutes before we open, what are we looking at today?
The red has improved slightly, Dave. We've got the Dow down about 0.25% right now. The S&P 500 is down 0.4. The NASDAQ 100 is down between 6 and 0.7. And the Russell 2000 is down almost 0.7. So everything's red on that chart. If we flip over to the commodities, we got silver up a little bit, about 0.2%, gold flat right now, and then crude oil is up basically 1.33% to $79.14. I look for it probably to close above 80 today if we're not careful.
I suspect that's probably going to happen. The overseas markets kind of reflected what you'd expect for the oil industry. Asian markets were mixed at the close early this morning. European markets are saying, holy crud, the last thing in the world we need is more problem with Russia. And they're off substantially. German markets are down by well over 1%, ditto for France. And English markets are down by about 0.2% halfway through their day. Stuff that we can't control, stuff that we don't expect can affect our retirement funds unless we've made sure we can control the risk in them. How do I find you to get a hold of that risk and get it under control in my retirement, Phillip?
Hey, then give us a call at 863-382-0037 to walk through our core retirement design. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And we'll check in Monday morning with you and find out what happened over the weekend. Let's cross our fingers things settle down and the mood improves. Have a good weekend.
All right, buddy. You too.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope that you have a great weekend and join us again Monday, same time, same place. Until then, so long.